2025 is less than a month away. What do you need to know to grow and protect your money? First, let's talk about risks. Yongchen, what for you would you say is the single biggest risk for 2025?
I think as a Singaporean working professional, parents of two young children, I think my biggest worry will be on the impact of Singapore economy with the changes that's coming up. For example, we are going to oversee Trump administration again when he mentioned about wanting to have a tax cut. Of course, the intention is to drive business activities, economic, but potentially it could also be leading to a fiscal deficit, which in Singapore we could be potentially facing a higher interest rate environment, which is not really helping with our inflation, right? At the same time, we could also be seeing higher costs, increasing in prices of goods and services in Singapore because of tariff.
I think it's a valid concern. You see, if you look at where the equity market is today, how it's been performing, and in fact, we are at record high territory, to me, there is a certain level of over-optimism. And that, to me, has always been a concern. It's easy to draw parallels to what Trump 1.0 has done. It did pretty well for the markets. But today, when President Trump takes office next year, I think the environment he's going into is quite different, namely record high valuations. But at the same time, we are also in a very late part of an economic cycle. A part of a cycle where you see monetary policies being rather restrictive, you see economic growth starting to slow, corporate earnings starting to slow. So a lot of this potentially could be derailing if the Trump administration and his policies are actually executed into 25 and beyond. Particularly for those companies and countries who are on the wrong side of its trade and tariff policies. So I think perhaps global investors should be thinking about that somewhere downstream.
You mentioned inflation already earlier, Yongchen. Do you think it's going to continue to be a sort of headline worry for people in 2025?
I think inflation has been worrying us for the last two years, and we were hoping to see inflation coming down, and that's why we see the Fed's starting to cut rate. But at the same time, some of the policies that potentially are rolled out are inflationary in nature. The longer term yields are also higher. So I think it would have an impact, especially in Singapore, where we are trying to manage cost of living.
Trump's policy, by and large, is inflationary in nature, and we saw that in the fixed income market when there was an almost immediate steepening on the longer dated. So the market is already pricing the inflation possibility somewhere down the line. The problem with this is that the Federal Reserve has been fighting inflation since middle of 2022 till now, and they've been pretty successful in trying to grind down the inflationary pressure that the United States has been facing. However, if inflation does resurface, it's going to be a big problem because it's going to impede what the Federal Reserve can potentially do going forward, because they have a planned rate cut path from now to next year. But if inflation resurfaces, that is going to be very challenging for them to be able to cut rates going forward.
Do you feel that this is going to sort of change the pace of the rate cutting?
Markets has indeed been pricing in both on the equity and the fixed income market. So what is likely to happen is that if the rate cuts do not happen and rates continue to stay lofty and high, I think it's going to be challenging for both corporations and individuals, because higher cost of borrowing is going to eat into profitability, is going to derail hiring and expansion plans. For the individual, the cost of living, the cost of borrowing is going to be expensive. So chances are you're going to see a lot of this negative reactions in the market. Not immediately, markets are looking really good right now, but maybe after Trump comes into power and when some of these policies are actually trickled down into the system.
So do you feel it's an initial exuberance that may not last?
Whether it's an initial exuberance or not, I think it's still debatable, because Trump policies are largely pro-growth. So as long as you're in corporate America and aligned with his policies, certain industries, I think you're okay. However, if you are on the wrong side of his books, perhaps you should be thinking, or at least company owners should be thinking about their strategies going forward, given the headwinds that are likely to surface.
We've spoken about a lot of gloomy stuff here. Are there any bright spots to look forward to in 2025, Yongchen?
Yeah, I think a few months ago we were just talking about the impact of AI, technological advancement. These are still bright spots that are ongoing. We have also advancement in cloud computing, which will help grow economy. Of course, don't rule out on the enterprising US economy, right? So these companies in US, they continue to have access to global talent. At the same time, they are still the leading companies in their respective industry.
I concur on that point on the United States. Clearly, Trump's policy is pro-growth in nature. However, one needs to be a little bit more discerning and maybe a little bit more granular in nature, because not all his policies are all-encompassing. You see, Trump does have certain preferences in terms of industries that he wants to support, namely in the energy space and the financials, and also in the technology space, because a lot of his tax cuts and deregulation has a profound impact on these industries. But there are also industries that may not fare so well because they may not fall within his belief sphere, and these industries, like green energy, may not be top priority.
There's also fears of Trump sort of, starting the trade war with China again. How would that affect us here?
The immediate impact, I think Trump is already introducing nearly a universal tariff on $3 trillion of US import every year. That's big. That is going to have a direct impact on companies who are exporting or selling to Americans. So ideally, countries like China, which is technically his main target, is likely to feel the brunt of the trade wars and the trade tariff. However, it doesn't mean that the Chinese will take it lying down. They will probably come back with a tit-for-tat price war or tariff war to be able to control or wrestle some of the control in the global markets. I always like to use this. When elephant fights, the grass around them gets trampled. But within those grounds that get trampled, the grass, there's always green shoots. And these are the green shoots or opportunities that investors should be thinking about because, for example, when supply chains are disrupted, people move their capabilities, their production capabilities outside China to other countries. So it's called a China Plus One strategy.